Okay, let's do it. Thank you. There's a mute button for that, and that's not the right time to be hitting it. Good morning, chat. Happy Monday, April 11th, here on another beautiful trading day. What's going on? Argo Glass, stepdad for cutie, huh? Miss Stephanie, you know the deal. I'll be talking to you today, for sure. Everyone else, Victoria, hey, Daniel. Thanks, everybody. Listen, great crew. Great sessions last week. And let's just take a minute because we're going to have lots of minutes. Um, we're going to talk about the market today. We're going to talk about crypto, of course. We're going to talk about this pullback becoming more of a pullback. And then look at the markets doing what they're doing today as well. Not a lot of fun. Not a lot of fun if you're looking for uptrends. I think we're just back in consolidation, stair stepping in a larger sense. I think we've seen that this year. This year is the opposite of last year. Last year, beautiful uptrending acceleration price discovery markets. This year, consolidation, run right into resistance, come right back, grind at support, and take a lot of time to do things. So, clearly different markets. I was thinking pull back 43, 42 at the lowest. Didn't want to see it under 42. Say low to 40,895. What do? Bitcoin on your daily chart is still just getting rejected at every conceivable short-term resistance development. If it's a short-term RSI, if it's an amplified reading on Bitcoin, take a look. I still say we had great the action in the last end of the March where we finally did establish a couple lows. Fantastic, because it really thwarted the major collapse that I think January, February was on everyone's minds. But this type of consolidation environment, every time you're hitting some kind of short-term extreme, you're going to have a zigzag consolidation trend. We're not price discovery. We are not even price acceleration. But you're oversold, which is no doubt the thing we have been talking about since last week, because even last Monday we were coming back down. Now HSI got fairly deep on this sell-off, but if we can pop today, come out of the zone within this larger consolidation trend, which is what it is. I mean, it's just not going to be that sexy of a market. Oh, get those magnets or something else. So our general trend, larger zone, just something like that. And I do think that the pullback, against a lot of the daily, weekly patterns that after last week's thrust or the completion of last week's thrust, it's going to take more time. That's all. I just think you're going to come back test more time. Here's an example. Something that, there you go, sand. Now, here is another example of a real nice type 2. Metaverse, type 1, bang, come up, type 2. 276 on this is your XA level. And looking for a pullback against that longer term support of that bat. All right, well, now you're there. But do we have a trigger? Because this is what we want to see on the pullback. If we're going to have a delayed, extended, whatever, you still need a trigger. You need a secondary amplified RSI, HSI to come hit the zone oversold, and at least go back up within this consolidation range. That's really maybe another reactive push. That's just the type of where we are. Here's Zcash. This is the one I left with. Let's go to the 4-hour. It had this alternate bat pattern. Let me blow it up. So I was saying when I left on Thursday, look at 165. So let's look at 165. And I don't have the levels. Let me get the levels fixed here. Hold on one second. Don't know why that keeps going back. Really quick, folks, I do want to share with you what HSI, we do have a new HSI. So really quick, before I get too much further, I will come back to Zcash here in a moment. But we have updated the HSI, and this has also been translated finally to the other HPC Pro programs on eSignal and Sierra Charts and Ninja. So that's been kind of the bigger delay, because there have been some inconsistencies due to the fact that certain platforms by default were grabbing a number of bars, not a consistent number of bars that's required for the HSI calculation. So what we have done is updated that. All you need to do is remove your HSI and install the new version. It'll be there, just HSI, and you want to put in new arrows. That should take care of also the long-term issue where harmonic strength index was not generating on daily or weekly charts. If I go to Zcash, you see that now. I mean, a lot of times we were not getting, even on like daily crypto. So that's really nice to see. Let me even just push it and go to weekly. Should not have a problem here. Yep, see? Even on the weekly. This bottom indicator, that's harmonic strength index. So that's been again, and before I go any further, so get all of the information. If you have still more questions, and again, the easiest place for me, direct everyone back to the basic members. I know most of you know this, but we still, and it's great. I mean, we're getting a new influx of new people, which is fantastic, and I welcome everybody. So I will take 30 seconds just to show. Go become a basic member. Go to harmonictrader.com and then get on your basic member page and take advantage of all the software trials, your trading view access. We just need your username. That's all. 14-day free trial. If you'd like to try it a second time, no problem. And now that we have fixed harmonic strength index and we have upgraded to the Pine Script 5, so what is next for the software will be the bot. And that was essential. I've been talking about the bots in the beginning of the year, but the Pine Script 5 indicator was a surprise release for us. And then the HSI issue was something we had to fix. I know several of you had some problems with it. Now, on all of the time frames, you should be able to get it and you shouldn't have a data issue. Unless you, like, let's say you try to go to an annual chart, you're going to need, I think it's more than 1,000. I don't know what the exact number is. I don't even want to give away the exact number, but it's a fixed plenty of data so that we can calculate the correct HSI. All right. So Zcash, let's go back to that. And HSI is important for this because we did have perfect type 2. And I was saying look for 165 like this. This was on Thursday. Came back down. And down to 165. Up. And then violates the trend. Violates the uptrend. Violates where the projected level is 201. Okay, got a size 182 from 165. But now, where are we? And I said where we were going to be on Monday is going to dictate a whole bunch of really the possibility of what will happen for April. And April is going to be probably a sideways month. We will not get the move. I'm not too concerned about even this breakdown here, but this kind of action where we are is going to suggest that this whole deal is going to take more time. So Zcash, that opportunity is over, folks. And I did move from 165 to 183. How you deal with that, how you handle that, how you manage that, even if you were in at 165 and then let it come all the way back down, you still had days to get out. That kind of a thing where if it doesn't follow through on the trend line or does a clear rollover, you have to scalp it out. We might get another opportunity with HSI entering the zone, but that's still probably 3 to 4 bars away, which is tomorrow. On the daily here, this is probably the bigger Zcash actually for where it's headed. If it wasn't going to hold 165, and there you see the arrow. I mean, we were looking for this arrow, and we had a daily HSI signal. We talked about that as well. But it's just a brief reaction. This deep crab pattern from The daily time frame that topped out back in March, not the prettiest of patterns, but I would still target 145 as the next level where then, I would be looking for something down here. The inability for that to continue, especially in the last 2 days since Saturday, what it did this weekend, it's kind of a dud. Another dud. I just think it's going to take more time. Even if it slogs all the way back down to a target 2, I think this stuff's going to take more time. A few people have asked me about XRP again, and XRP is just about a weekly Gartley that is going to grind in the zone until they get that announcement. I suspect that announcement will be positive for the stock because of where we are within the one type 2. But the thing that I've been saying, where I feel like these are going to be extended type 2s. I think these are going to be these weekly and daily patterns that are coming back now to retest another trend line. It's going to take more time. It's going to take more time. We're back to that more time thing. At least you were able to prevent, I think, what would have been really the trigger of a full bear market had you failed going into the end of March. And I'm not too really concerned. We're looking for this, still looking for like a micro pullback against the larger zone, but it's kind of a dud rollover. I just think it's, I got to call it as it is. Zero continuation. Very positive secondary move here, but it's going to take more time. More time. The other thing I wanted to show before we get out of this, the total crypto market cap for the daily level on our crab pattern scenario at 209, more than a pause. In fact, your 183, 1.835 trillion on your market cap, XA level retest for what would be a type 2. Yeesh. There's no continuation off of that. This stalling and perfect check back. All right. We're in full return. We broke the trend line really Friday of last week. Like that. It's your type 1 trend line. Probably even better to just draw the primary trend line, which is, hitting that now, but there's your accelerated reactive trend line. That's usually the one where you roll over on that. What are we? Monday, Tuesday, last week? Yep. Come back for the retest. So the XA level at 1.7473 is the official type 2 off of this crab. More time. Again, that kind of rollover and Zippo follow through. That's, you come back, type 2, retest. I don't think it's really much to go there. There's a lot of patterns where these will be extended type 2s. Here's Ren. It's a big butterfly. Never got up to target 1 at 66, but probably just going to come back down, hit an XA level, which is around 30. And I would be looking, again, for this nominal thing as these extended, and that's what they are. Just these extended retest off these patterns on these daily levels continue to get pounded out. That's what seems like it's going to do now. straight up, bang, straight down. Here's the other one where, listen, Doge, we were talking about Doge of running to 18 cents but still being in the larger zone. Um, that's what it did. And it came right back down, but let's see. Let's go on the, sorry, daily. Yeah. I think the hop level, that's not right. The hop level was, there you go. So there's the Binance feed, which I think is the best feed for Doge because it's mostly American generated trading. Your big XA levels on these sharks, and go look at last Monday. We covered this in detail. 13 cents. And I suspect you will come to 13. You'll go back to 15 or 20. You'll come back to 13. Actually, there he is. There he is, VJ. I talked about you last week. He says 9 cents is the buy. I absolutely mentioned the conversation, the email that you said, where you said go to 13 or 12, up to 18, maybe back to 9. Maybe, but I think we will bounce around up and down uh, for a while. Try to get off of this low, but that was a complete rejection off of 18. It's going to take more time. Look at the indicators, and that's probably the best way to be gauging where your next opportunity might be. Because if you're down in here and you're down in here at these overbought levels, that's around 10, 11 from the last series. If you were just going to range bound, what I need to do is expand this chart. So, look, ultimately what Doge is a speculative penny stock that you are trying to capitalize on major percentage moves. So if you go from 10, 11, 12 cents to 16, 18 cents, 30 to 50% in a short period of time. But within this range and what it's going to do, it's going to zigzag. We see that best in amplified RSI. Oh, before I forget, I know you said that, so I have to pull this up too. The 127, I don't know about the 127. Listen, the Doge and all of these are against their long-term all-time 886s. That was my fear on Doge all the way up at 62 cents, and you know that. All-time 886. I know that's why you're thinking it's going to go to 9 cents because that's the 886 all time. And then what, up to 33? We got to see. I just think it's going to probably zigzag. Of course, Elon decides to not join Twitter's board. So there goes the railroad straight path of Doge and Twitter, but they'll still probably happen. But that's not, we're looking at really the long-term weekly levels. If I'm going to assess that this long-term downtrend getting to the right, and the further we get to the right of that downtrend line violation, the better off we are. Trigger me in here. Trigger me to the right of this line, which is where we should be looking. But this is a long process before you get to some acceleration phase where you're going to, up, back down. We saw that last week. I still think keep an eye on it. I don't think that's going away. And again, if you're going to speculate and be in crypto, which everything in crypto is speculation. It's probably where money's going to go because people are going to follow Elon Musk. That's it. It's a special situation. It's just there are some opportunities that come along that they're tagged by special situations. Okay, let me go to Ethereum really quick. Ethereum's back down to the 3,000 level, psychologically huge. Look at the Gartley on the daily. Now we had a few different things line up here where I actually on the perpetual contract was that or no, it was this Gartley, but I thought it was on Binance feed. There's Gemini. Okay, I think it was the Coinbase feed we were really focused on. You guys see me hitting a couple of these different data feeds, and some of those data feeds are smaller than the others. Let me fix this again. Okay, there you go. You can see that a little better. Let me bring that's better. Okay. So Ethereum, I didn't hit the. Don't know why these colors are going to default like that. There's the zone line colors. Thank you. So Ethereum actually is already a type 2 off of that crab pattern. I think we talked about that where we were looking for target 2 at 38.87. But we're going into a 1-2 butterfly. So we completed that butterfly last week. Reaction on the pullback, which is, we had a few of these. I would look for the return. Come back and hit the return. Maybe we go as low as target 2 at 27.89. I think that's could set up where take a look at your indicators. We are oversold already on HSI. The nice thing about amplified, and I mentioned this last week, we had a complex structure. Your red line has gone on. So we come down here. We're going to retest that oversold and complete the RSI BAM. That's what that green line is. With a double HSI reading. That Harmonic Strength Index oversold. Amplified RSI oversold. Maybe we come down. We're at 3,000. They're 210, 220, 27.89, something like that. And then go for the retest. Because this should hold. Go to the daily time frame, and again, what you're really looking at, what you're really wanting the longer term trend to do, even in the midst of these patterns, is just continue this consolidation and a lot of work at this long-term uptrend. Come back, retest that trend, and go again. But not go mooning yet, not accelerating yet. And that's something I think I said with Bitcoin as well, is any acceleration has to be, there's more work to do, which is now we're seeing it. It's just a little bit more than we wanted. Let me clean this up. Bang. There's Ethereum on Coinbase. Beautiful bat pattern at the hop was the low. December 31, 2018. So you're up 100x since then. Still. But the long-term situation with Ethereum, folks, is like this. Maybe not draw an uptrend, but maybe draw like a an arrow through the heart kind of a thing of the lows, okay, where this market's going to come up, thrust, and get knocked back down against this long-term uptrend and grind, 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 grind. Because we're not in acceleration phase again, your obvious support points are failures here, but we continue to make higher lows, which is, I think, as strong of a sign as you can see, but still going to have many, many retests of that line as it grinds higher. You're not in acceleration phase. Anyway, that's that. Come back down. Deeper retest than I really wanted. Okay, 27.89. And then let's take this to task in terms of future opportunities or future possibilities. We're going to be reactive for a while. That's what this tells me. Any move, any sharp move, 30% move, that's what this was. 25% move, it's probably going to be that, and you're going to probably then retrace 20 of it. That's the kind of market we're in. Not, opposite of last year. It really, really was, or really is. I do want to get into a couple other markets. I got some things to do today, so I'm going to be out early. But let's go over quickly to natural gas. Talked about that yesterday. Here we got oil, folks. The oil ETF is now taking off again. So I want everyone to... I know some people did not take profits on the first time up. People, please get ready to take some profits. I don't care. I still think we're in a larger development to break out, but let's anticipate correctly. Here's oil. This is the natural gas ETF that is accelerating. We've been talking about this for a long time, but let's connect some dots. X to A. B is at a 50% to get the 886. Around $88, $89, okay, within this breakout. You're 77 now. I would expect some resistance up at the 886 initially, and where we could get an even nicer opportunity for oil is, let's say we hit that 886. It'll probably come back on a reaction, and I would not want to be caught in that drawdown, because I think after this reaction structurally, that's the point where oil breaks out. Then it goes like that. So for those of you that are in profit, approaching profit, get ready. I think 88 bucks, $90, somewhere in there. You're going to want to take profits, because you're going to see this thing come back. And some of you I know have been in this for a while, riding this. I've been saying that this energy move is like a 2-3 year thing. So there's going to be ups and downs. Maybe we need to take advantage of that more so than we have. I think there's been some nice swings in between. And for the crude oil in particular, the rejection at the all-time 886 is, we'll look at that in a moment. I think just going to result in a pause where, pauses are not, I don't like to be in pauses. If I know something's going to be in a pause, I'd rather not wait it through. Here's the UNG. That was the daily. There's your weekly, folks. And again, UNG is a perfect type 2 deep crab. Came off of that low up to target 1, back down. Did we get that retest? We really did not get that retest on the weekly. So it's still a type 1. Possibility of going as high as 28.04, but that's probably it on this move. And I would look for this current move, and we know nat gas is spiky. Hitting some overbought levels at the moment. I would expect maybe next week, maybe into the following week, where this could peak out. UNG is almost 23 bucks. We really have been talking about it since a long time ago, but several opportunities get back in at 12, 14, and here we are, probably going to run to 28.04 or roll over just shy. You're 23 bucks. I would say within the next $3 or $4, 2 or 3 days, you're going to hit this and start to roll over. And then next week, into the following week, you start to do that. Nat gas is up, was up another 30 cents today. Let me see. There you go. Yeah, 30 cents, 29 cents. So, getting close. I do think the big takeaway and what I want to just highlight some thoughts that we are going to be in I think a start and stop market across the board. So if we're getting a 1618 extension, if you are getting a short term, say 3 to 6 week rally, don't be surprised if the thing tops out, pulls back, 50, 88.6% of that move, as it just does a lot of tight consolidation. And I think I'm trying to flash up this calendar here, something to consider, where we're coming up onto a holiday weekend. All right, and then we're going to get into the last 2 weeks of the month where if we were going to do something that was going to continue what started towards the end of the quarter, we would be absolutely rocking, and we're not. And although I'm not too concerned, I think this stuff's going to take just more time as it consolidates. That's going to require aggressive reaction, type 1 strategies to hit profits. Let me bring the other platform in. I did want to show. Okay, really quick. Should have done this in the beginning, but quick disclaimer. So, yeah, I can maybe put that in the side. Most of you know that deal. Also, check out the stuff from last week. We had a great conversation with Mitch Ray on Thursday. Double shot, not only there, but here, but there. We got on. We were on for a couple hours on Thursday night. Got into a lot of stuff. So, really things that are going on currently, too. Nasdaq's down 265 at the moment. And this just, is this going to roll over? That's what I want to see, what goes on with Nasdaq into the next week or two. If we're not going to do anything, if we're going to just start grinding lower, probably just, this pop and roll thing, it's going to be a problem for the markets. And even with the energy going sideways as it seems to have done for now, that whole concept of being more time, requiring more time, is going to probably test a lot of people's patience, I would think. So if you got profits, if you're getting sizable short-term moves, they are probably reactions, and I would be more anticipatory in just pulling profits in this kind of environment. Let's see if I can, what's going on with that? E-signal won't come up. Let me try that one more time. Is that frozen? Sure is. Let me go back to the TradingView platform. I don't want to waste any time. I do want to show one or two other stocks that I think are signature type stocks you want to take a look at. You don't want to, you want to pay attention to what happens to these at these levels. Here's Walmart, folks. And Walmart, mentioned Amazon last week. Walmart's up here, finally just triggered on the weekly or daily level an HSI signal on the retest of a deep crab. And Walmart's been one where had back-to-back patterns that I've mentioned before on not only this platform but the eSignal platform, and framed it out where there's your bearish terminal bar, that deep crab from back in August, had a nice correction down to this bullish bat pattern, and then set the floor about 140 and set the ceiling on here, especially with the hop level at 153. You could say 151, 52, but you finally did hit that hop. Perfect example of a situation that looks like it's going to break out, right? No. I think you're going to have to realize that that's just testing the top of the range. And you've got red arrow with our new reinforced HSI, so feel good about that, especially on the daily. Or what's weekly HSI look like? Yeah, weekly HSI is about to hit, and oh, look at this. Yeah, you do have a weekly amplified reading that's trying to pivot out. My point being, don't fall for the false breakouts. And that's what seems to be going on. You're going to get a push, and then you're going to have the correction. Especially when your indicators are, when you're doing the breakout and your indicators are hitting the oversold and get rejected, not a good sign. Not that you have to concern yourself with a major pullback or failure. It's just going to take more time. It's going to consolidate at those higher levels, not continue. Really quick, XLE is another one on the weekly. Really feel like energy's going to, this pause will continue at a high level. I'll still look to add, but for now and the short term, we're in a pause. Let's go there and agree that crude oil, although natural gas is up 30 cents today, you're just in a larger pause. Let's look at light sweet crude. There you go. Monthly. Here we go. All-time 886 is the story, folks. Go back to 2008 peak, and it was almost exact. And I said way back when that, okay, if we get a pause, not that I'd want to see this, but maybe what's going on is some kind of pause pullback here. This is monthly too, but what, a 382? That doesn't really make sense. Something like that, or some kind of even just smaller pause before you continue to go higher. Don't know, but this 886 that has just kind of stopped on a dime is clearly what's going to hold it back until something develops to the right. Probably some kind of bullish pattern needs to go here. Now trading 94.50. They're not defending $100 well at all, but uptrend still intact, and that's probably the takeaway, where this kind of a thing, you can get off of that uptrend, come back and hit it again, and still be in a long-term uptrend. Probably like that is even better. Encompass more of the lows. Keep an eye on that. Again, I think we're reacting off of that massive decade-long 886. That's why you're getting the pullback, the pause. That will take more time. Okay, that's the critical part. It will take time. At least 30 days on the daily chart, again, and maybe even 30 weeks, where you hover $100 plus minus 10 for the next while, 3-4 months. Got to wait and see. But we just came off of that long-term average uptrend a bit too much. They couldn't handle it. Now we're going to have to come back and hit it again. One other really quick. Yeah, let's do the gold. Gold futures. Hello. Daily. At least this one's responding a lot better than, say, that Bitcoin chart was. Beautiful crab pattern, folks. Off of the 1618 level. Gets you to 2068. And remember, that thing got slammed. 1925. That has been the target, minimum target 1 level we have discussed with HSI at around 1917. That those were the areas to be checking out, and go back 2 weeks. 2 Mondays ago, probably. That's what we were talking about. And now we're slow and steady, but come back and retest XA to complete the crab once and for all. Around 2068. It will take time. This is a daily chart. To do that return, minimum return, it's at least 30 days. But keep an eye on it, because the larger possibility for gold has to happen where you go to the hop level at 2172 on gold. It's going to be slow. It's probably the place to be, but it's going to be slow. And that's, I think we're getting to that point where, okay, where are we with Nasdaq quickly? Yeah, we're down 280 still. We're not moving. Nasdaq's down another 280, so let's look at those charts quickly. It's probably a situation where your good sectors are going to be sideways with a steady dividend yield, and then your tech, speculative, whatever, is going to grind until they can give you some kind of clear bullish pattern. Oversold condition. Here is Nasdaq 100, the futures, and we're already in oversold territory on Harmonic Strength Index, which is nice to see because that is working. So you're fairly deep on HSI. You still need probably 2 more days to hit the oversold and amplified, and then pivot out. It would have to be. The thing to look for, okay, with Nasdaq would be, you want to see this thing pivot out and begin to stabilize, because it would be the first reading that would be higher than the prior HSI, prior bullish HSI. And that matters. What I would not want to see is this thing kind of slide all day today, now 12:30, slide into tomorrow and just continue to expand in the oversold. If you see that on Nasdaq, then maybe we will get the test of the deep crab. Remember, The 1618 from October. This is a deep crab situation, but all of that's around 20 12.8, 12.9 was not officially tested. Keep an eye on it. If this is a nasty rollover and that's what it's going to be, you'll know by 4 o'clock today, quite frankly. I mean, look, 4-hour time frame. Your 4-hour chart, our HSI is about to go oversold, but amplified RSI is, oof, taking a turn for the worse, going back down into the oversold. You need to let that thing pivot out, and that's a 4-hour bar, so you are talking a couple more bars. And then go. It's going to take time. I'm not trying to spread FUD. I just want everyone to know that that kind of consolidation, what it's doing, is going to just want to backtest support, want to take time, trying to form a base and retest prior corrective territory before it does anything. Those are the phases of the market. How many hours till 4 o'clock? Well, you got 3.5 hours till the close today. So, what's that 1-minute chart look like? Yeah, there's a little butterfly pattern. That's on a 1-minute chart. Beautiful Nasdaq futures on a 1-minute chart. A butterfly. But this demonstrates everything we're talking about with crypto and a lot of type 2 situations. This is just on a 1-minute chart, but it shows the whole thing in a sped up time frame. Look at the zones. This I didn't even mean to go over this, but it's such a good example of harmonic pattern framework that let's trace it out. And this is now. This is Nasdaq right now, 1 minute. Look, there's your terminal bar, okay? First time it hits the pattern. We're thinking reaction. XA level is 1472. But your reaction to what? To target 1. 14,113. So I'm lining that up as a 40-point range. Goes up, gets immediately rejected. Now here's the deal. In this kind of a market, under every circumstance, because it's such a non-trending market is the kindest way to say it, that you would just want to assume that these kind of reactions, I don't want to screw around with anything, preset, take a limit order on half or more of your futures position, get out, and expect the retest. Some of those crypto we outlined on Monday and reviewed on Thursday, we would look for the bounce and the retest. And that's what this did, but perfect. Look, there's the confirmation right there. That confirmation is HSI. This right there, that green. That sets up anything to the right of that arrow. Okay. That's fair game to the right of that arrow. It's a type 2 off the butterfly 1-minute chart. And you're looking for 14,145. That's what we expect. But it has to maintain trend line. You need to see other confirmations. And what is this doing? Sideways for 30 at least. Some kind of lift off, no follow through. When you see that, any market, folks, the likelihood is that it's just going to take more time, and as that drags out, that starts to wear outside of the ideal framework. And not something I'd want to participate in. Are we going to trigger? No, we don't have anything even. You just generated something where, yeah, I would want to have this come down. Retest. has to come back down and retest. It's kind of a sloppy situation, a sloppy type 2, and that's where I feel a lot of crypto is, and the larger markets, they want to just take more time. Again, your Nasdaq's down 270. The Dow is down only a couple hundred. Where are the diamonds? Yeah, Dow's down 218. That's really nothing. Here's your daily chart. All right, there's daily, probably even better monthly. Again, until Dow breaks under these prior lows around 32 for the diamonds, it's 320. For the index, about 32,000. And I mentioned this on Thursday, that just highlighting possibilities. And I think that's an important note from what I was saying on Thursday, if it was Nasdaq or if it's Dow. There's going to be plenty of time, and the kind of the confirmation, if it's going to happen, would almost be obvious, to where you would first get the break and then you'd get something a lot more, and you're not even at the break point. I do know that my Nasdaq on this one on TradingView is delayed by 10 minutes. But I'm really just kind of going through. I'll go to the real time. I'll pop up real time HPC Pro on eSignal. If it'll generate, I don't know why it's there. It is. I'll bring up real time. But you're right. I probably should be showing real time. Go here. Take a quick look. Let's go real time. Yeah, there's Apple in 4 hour. Boy, again, Apple, you want to know what the market's going to do? Just follow Apple. Have that up if you're trading futures. Apple in the daily. There are a couple things. Basically, look, 176 on your daily level. Remember this? We looked at this last week for Apple. This is real time. Okay, and again, this is probably what to expect from the market going into the summer. That we will be contained, and you'll just be range. You want to trade that range? That's good. Trade it where resistance will be defined by the top range of some kind of bearish pattern or hop like this, and then we guys still have to get to target 1. But look at the zigzag in between. I mean, just not a lot there. Come back. Although the HSI has been quite effective, and that might be something else to consider, where on a lot of these charts, we just trade daily HSI to HSI swing. Because if we're going to go range bound, which we probably will, as other problems pop up that and a lot of the forces working against the market, you're not going to get major trending situations yet. But go from HSI to HSI. I think this is something for tomorrow. Identify some situations that are lining up like this. Apple currently just triggered another bearish HSI, where until you can come down, or here's amplified, we're in a short-term correction, short-term pullback still. But that's all it is. I don't expect any major collapse, but I do expect a lot of range-bound noise. That's not fun. That might be, for me, a situation where another week or two, I might just take a break from active trading. Let me update a situation on Zoom video. And remember, this is an extremely long-term, weekly pattern. Okay, we're 3 bars into this. This is week 4. So someone was, I think, saying, okay, they thought Zoom had failed because it rolled over at that zone around 125, trying to get out of that zone. No, this is another situation where the reality of a weekly pattern that goes back from all the way here, your X point, 2019 to where we are, 2022. Almost 3 years to develop that weekly pattern. But this is why we look for and talk about number of bars. So if we're in a 3 to 5 bar window post terminal bar, okay, you're talking over a month. You're talking 6 weeks of consolidation before you might even trigger. It's like there. And I said under 121. That's how to be looking at these, where if we do trigger and finally can get something, let's say the market washes out and can give us some kind of short-term bottom, I still say that the weekly chart of going to target 1 at 283 is a likely objective, but it could take 30 weeks to happen. Again, that 30 bar minimum, if it's identification, if it's management, execution window, usually not so much an execution window. But the whole type 1 reaction process, that should take 30 bars. We're on a weekly level. You don't like a weekly level, then go to a 5-minute and trade it on a 5-minute time frame. Scalp it. Let's go 5-minute on Zoom. What's that look like? What's the last pattern? Oh, okay. Last pattern's a 1-2 deep crab. Type 1 at 111 up to 118. And came right back into the zone in an ugly fashion, but still reacted. But notice, here's a failure. Okay, great. That's a 5-minute time frame for Zoom, and that's over the course of 2 days. You have 2 opportunities. But these are all reactions. And notice how, I think it's a good one. You pop and roll, and come back and probably going to retest that more of this weekly range between 100 and 120. It's just going to take time to develop, and you're going to bounce around in that zone for a while. No acceleration yet, folks. You're in final distribution, consolidation, early accumulation phase. Again, think 30 bars. And if we don't move off of here within 30 weeks, or basically another 6-7 months, puts you into the fall, then you could say something worse is happening. But a lot of these weekly situations, okay, point to something happening really this fall. Here's, again, Meta Platforms, Facebook. That's a weekly there, but that's not the pattern. The pattern's on a daily. There you go. It's a couple of deep crabs, but I think we talked about this one where it looks like a confusing situation, but even if we look at the immediate deep crab, and let me get out this. Remove that potential pending. There you go. So let's just assume it's this one. All right, that current deep crab off the October. It's still showing you it's going to take more time. Just showing us that there's the completion. That's a daily time frame. Okay, terminal bar is basically there. Tell me what it's doing. Continuing lower, continuing lower. 30 bars is there. You haven't done anything. In fact, just triggered another, for this situation, you triggered a bearish signal in a bullish zone. That's not a good sign. I would look for that HSI to take us back down to 207. just a lot of things coming together where it's not, it's going to roll over. It wants to do another rollover and just take more time now into April than giving us some kind of larger type 1 reaction move. I think these will, come back and probably retest the hop level again. And until that happens, or I see another bullish trigger off of a major pattern, this stuff, even though it looks super juicy, I mean that would be a beautiful pattern, much like the bearish one was, and this is a good example, back to back. Look, there was the bearish candle, a bearish terminal bar of that deep crab that was saying way back in July of last year there was something to look for. But you had multiple hop tests and did not roll over until literally months later. So, again, understand that's where we are in the markets. If you're going to be trading these markets, okay, or looking for positions, like let's say I want to get into oil, I want to wait for a pullback. Okay, we're in this pause. If we're in stocks, this stuff's going to consolidate more. And if we get reactive bullish moves, expect them to be just reactions. Beyond that, probably this one needs to be discussed too. And wrap up. I'll wrap up with this, S&P 500. Because the daily scenario has, really, these are the clearest patterns across the board. Beautiful shark pattern off of your October low. Notice how important the October low is for so many markets. Are you at an 886, 113, 1618 from October to January and you come down? This is a 113 at its maximum level. So the pattern, everything has to hold. We could come back down, especially with this shark pattern. Maybe retest 43. And go again. Something like that. I thought we could reach, and it is. Certainly, there's your 1. Come back down for the retest, and then this type 2 should have got to target 2 at 470. But violated the uptrend. Did not. There was the HSI. It was really kind of a sloppy HSI signal. And now we're back down on. The thing we did talk about actually was amplified RSI. And go back and check that end of last 2 or 3 sessions of March, where that was a short-term level that I would expect. Look, we're coming down here. Just get oversold again. That's probably what this will do. And then you start to just kind of zigzag, stair step. That's not fun. That's absolutely more swing trading style stuff that, again, I think in the next few sessions we're going to have to talk about getting more aggressive on profit taking, more aggressive on positions, more active trading than swing positions that are going to run. You got a lot of stuff that's moving hard but not being sustained, and again, that kind of a thing when it's very good on the upside, super strong, but can't follow through, then you're going to have to go through corrections, retracements. That's what seems to be the pattern, if you will, of price action here. If it's crypto, if it's the futures, if it's stocks, this stuff is going to take more time. That's the lesson. That's the lesson of the last week, folks. So with that, I'm going to leave it. We'll get back here on tomorrow. Again, please get with the basic membership. Okay, and get with HPC Pro for any one of these platforms. And then certainly the trading view, I think, has got all the markets. We even looked at some economic data, which proved to be pretty interesting. So start there. If you have any questions, get with me. Tomorrow we'll be back around 11:30 again. So bring your questions then, and we will get to it. Thanks again, everybody. Go get them. As always, we'll see